Greetings to everyone. Today we're focusing on a stock that's not very well known but is very important. Why? Because some investors are probably starting to accumulate shares of this company. The chart is extremely interesting and we like the fundamental analysis. Let's take a look together at which company we're talking about. Here we are. Let's see the company we're discussing today. I'm not interested in getting tons of views at all costs. What matters to me is honestly showing you analyses I believe in. So today we're talking about a company that some of you may have never even heard of, the Mosaic Company. Mosaic Company is an American chemical company based in Tampa that mines phosphate, potash, and collects urea for fertilizers. It is the largest U.S. producer of fertilizers. Based on potash and phosphate, this is an important company. Actually, it is the largest U.S. producer, okay, of both potash and phosphate. This definitely makes it a very significant company in the industry. And doing an in-depth analysis means carefully identifying all the potential opportunities, at least to share and thoroughly examine them together. Let's immediately use our forecaster software. It's a company with over 14,000 employees, and through its various subsidiaries, it produces and markets concentrated phosphate and potash-based nutrients for crops both in North America and internationally. The company's extensive operations and broad reach make it a key player in the agricultural sector, providing essential nutrients that support crop growth and food production worldwide. By analyzing its performance and strategies, we can gain valuable insights into the opportunities and challenges it faces in the global market. So, without a doubt, a very important company. First of all, something very interesting. This is a company that, despite seeing a drop in its share price, has always paid out dividends that have constantly grown, increasing from 5 cents to 22 cents. So they have quadrupled over the span of 5 years, and this alone should make us realize that the company relies on cash flows it considers sustainable. The price earnings ratio, which we know is typical for so called old economy companies, we want it to be below 20, and it has definitely dropped. Right now it's around 6 points. So this is also certainly an interesting figure, just as this other fact is very interesting. Earnings have gone from 174 million at the start of the year to 1 billion. That is 1,230 million, while the price has basically stayed at the same level. But in a moment, we'll see just how interesting the chart is. The chart of Mosaic Company. We've written that they're buying it. What news do we have? Well, usually by using the news tool, we look at the most important news, and by taking this news, we read how Banco Bilbao Vizcaya, commonly referred to as BBVA, is currently increasing. Yes, it is increasing its stake in Mosaic Company. In other words, what this means is that they are actively increasing the number of Mosaic Company shares that are held within their investment portfolio. This is, without a doubt, an extremely important and noteworthy fact that should not be overlooked. We can also observe, based on the most recent data available, that their position in Mosaic Company has increased by a significant 65.7%. Previously, they held a total of 157,000 shares, and now they have added another 62,000 shares to their holdings, which is a substantial increase. So, we are not talking about a small or insignificant player here because we are dealing with BBVA, which is a very important, well-known and influential banking institution that is making a considerable investment in this particular company. Not only that, but other entities such as First Horizon Advisor have also increased their positions in Mosaic Company, as has Genius Wealth Management and so on. So there is clear and evident interest from major players in the financial sector, since it is always said that we should follow the so-called strong hands, that is, the large influential investors, using the forecaster terminal by searching for the most important and relevant news. We definitely have some very, very interesting clues and signals, such as the fact that there have also been some recent upgrades to the company's outlook and rating. On the fundamental data for Mosaic, it's a company with its own specialized know-how, with absolutely essential skills and expertise that make it a company that truly can't easily be copied, even if someone had unlimited capital. It would be difficult to replicate this company even if a competitor had unlimited funds, because Mosaic Company manages phosphate and potash mineral assets on a large scale, supported by vast and extensive mineral reserves as well as long-term mining permits in both North and South America. This is certainly a significant and noteworthy situation. It is in fact absolutely important to recognize and see that this development helps us to more clearly and thoroughly understand the steadily increasing dividends that we have consistently observed over time. Long-term offtake agreements with major agricultural distributors and sovereign fertilizer funds. Seasonality is dictated by timing, but the contracts extend over several years, ensuring revenue visibility. In other words, they can already see and know what their guaranteed income will be for the coming years, and this clearly gives us certainty regarding cash flow. On this qualitative scorecard, we definitely have some interesting data. We see that there hasn't been growth in the last 5 years, but what matters to us in this case could be a sort of timing, because despite the decline since the beginning of the year, we are now seeing new growth. And as we've seen, major players are starting to maybe, okay, we need to be cautious. Thank you. Let's move on to the fundamental section, where based on the four parameters we use to determine the possible fair value of Mosaic Company, the first thing we notice is that all four parameters are above the current price. If we want to use a conservative estimate, excluding the economic value added, which gives us the highest value and could therefore skew our analysis, we remove it. So the fair value, which was $46.59, drops to $39.81 when we exclude the highest value. In any case, the current price is 56.69% lower than the possible fair value as determined by the average. This average comes from the Peter Lynch formula, the EV sales, and the discounted cash. We see a score of 5 considered stable on the Piotrowski scale, and pay attention to the next figure, which in my opinion is truly remarkable and impressive. The company is classified as robust because of its improvement, weighted financial data, and value creation. But what is truly striking is the buyback. From 2018 to 2024, the company reduced its outstanding shares from 384 million to 320 million, which is almost 20% fewer shares in circulation. So, from this perspective, there is very strong value creation. So, in my opinion, it's perfectly normal for some major players like the ones we've seen to be starting to buy. We can see that revenue has grown steadily and consistently over the years. In the last 12 months, there's been an increase of 6.94%, which is quite notable. We know this by now among the 12 months, so it refers to the updated last 12 months compared to the whole of 2024, which is an important distinction to make. We have an increase in revenue, and even though it's still almost at 10%, we can see a clear and visible improvement in operating income, which is a positive sign for the company's financial health. So it's an absolutely interesting situation, not because it's optimal right now, but because it seems to be recovering and showing signs of improvement. So we like the stock for these reasons. Looking at 2025, we see a return on equity, or ROE, of 3%, which covers inflation, and a profit margin that falls between 17 and 18%, which is a healthy range for this type of business. And pay attention, debt compared to equity is zero, meaning the company is not carrying any debt relative to its equity, which is a strong financial position. So all in all, the data is generally positive, not exceptional, but positive. And what really interests us is that noteworthy and significant players are buying the stock, which adds further confidence to our outlook. And finally, as we look at the chart, we can see that the stock had previously reached a price of $77 per share. Now, however, we are at just $25 per share, which is certainly quite interesting. Here we are. We've arrived very, very precisely to test the dynamic trend line, which right now is acting as a very, very precise and reliable support. So these $25 seem like a very interesting and potentially attractive buying area, and I wanted to share that with you. I think from this video it's clear how the forecaster is a valuable and indispensable tool for working seriously. In the description, you'll find the link to subscribe with a 20% discount for a whole year. Happy trading to everyone. See you next time.